it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for fifth generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there, not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Myron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうとどの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとはキャラクターとしてすごくYouTube とかで検索するとたくさんの初音ミクが出てくるんですけども、元々の初音ミクのその原点は歌声を合成するソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでにプロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってありっていうか。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the BowFlex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
I'm about to expose everything you won't admit.
And action.
This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh. But to fans all over the world, she's the YouTube star Superwoman.
What if everyone it's a girl, Superwoman? I know we can change the world for the better, one positive day at a time. My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea. Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone. Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And the mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe. And my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now, so we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done. but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well,
peanuts by the standards of
profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20. as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is a brand.
Had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that is this time this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through what was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in this space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from the city and the suburbs of New York. Welcome to Bloomberg Business Week. I'm Jason Kelly alongside Scarlett Fu. You came back. I'm so happy.
I came back because I can't wait to hear what song
Exactly.
Dave Wilson is going to play for Chart of the Day.
It's all about Dave Wilson's song. We'll have that later on. So much to get to. It feels like, Scarlett, the market is holding its breath a little bit ahead of tomorrow, maybe, when we hear from Jay Powell, because as I look across the equity trade, it's a very narrow band, it looks like.
Yeah, and it's also mid to late July, so nothing's really going on here. It's been quiet for weeks. We've known this Fed meeting was on the calendar for weeks, but it's like this week on Monday, everyone woke up and said, oh, wait, the Fed is this week. He'll probably be really dovish.
Yeah, absolutely. Absolutely. All right, we're going to hear so much more about that, get to the trade, and much more. First, let's learn about that trade from Charlie Pellet. Hey, Charlie.
Hi, thank you very much, and here's what's going on. Welcome back to Scarlett Fu again, and happy Tuesday to you, Jason Kelly. We've got stocks trading mix right now. Stocks are fluctuating as traders assess corporate earnings amid a resurgence in global coronavirus cases. Lots of earnings after the bell. Among the ones that were released this morning, McDonald's down 2.1%. Shares of D.R. Horton, they're up 1.4%. 3M getting hit hard today, down 4.3%. S&P right now up 2, higher by about 0.1%. The Dow is down 47 now, down 0.2%, and NASDAQ is down 29, a drop of 0.3%. We've got the 10-year up 10.30 seconds, the yield 0.58%. Gold is up 0.5%, 19.51 the ounce, and a pullback for West Texas Intermediate crude, down 1.7% right now, 40.91 a barrel. Recapping a mixed Tuesday, S&P up 2 points now, little changed, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Scarlett Fu here with you On a Tuesday, let's set the Business Week agenda before we go any further to get a sense of what we should be looking at before we get on with it. Vincent Signorella is here with us, global macro strategist for Bloomberg. He's on the phone near to me in White Plains, New York. He's part of the suburbs here, the suburban crew. Dave Wilson, stocks editor for Bloomberg. He joins us from New Jersey. Dave, I want to start with you. First of all, you got a huge, I mean, I knew she was a fan before, but I mean, chart of the day, song of the day, Scarlet Foo's all in.
Well, there you go. And I have a prediction for you.
Yes?
Scarlett will know the song. She'll have heard it, but she won't know the title or the artist.
Whoa.
Huh.
Okay.
So it's like
All
an
right.
earworm song?
You could say that.
All right. That's
In
a
any
deep
case,
deep
Challenge
tease.
accepted.
Yeah.
Fair
Tell us about the market today, because it's a sort of steady state, it feels like, Dave.
Exactly. I mean, earnings really picking up, so you're getting a lot of individual moves of note. You look at a company like Pfizer being up 4.5% after their results. Of course, they're also pursuing a COVID-19 vaccine with the German company BioNTech, and they've started a late-stage trial. So there's more than one piece to the puzzle. And you can find some other areas of the market that aren't doing so well, notably semiconductor stocks. You had some results out of NXP Semiconductor, didn't go over so well, an unforeseen loss last quarter, and the company saying it expects an operating loss this quarter, so it's down 3.5%. And just looking across, I mean, you can find some other examples like that. Martin Marietta Materials, F5 Networks, Omnicom Group, you know, across a number of industries, definitely some disappointments as far as earnings go. But put it all together, and it really doesn't provide much direction. I mean, when you consider, you know, you have the CEOs of Alphabet, the owner of Google, Amazon, Apple, and Facebook, all due to testify before Congress tomorrow, and then come out with results after the close on Thursday.
Yeah.
You know, it's not just waiting for the Federal Reserve this time around, it's waiting for big tech.
No, you make a really good case about how there's a lot more going on than just Jay Powell speaking. Nevertheless, the Fed's expected dovishness is continuing to weigh on the dollar. And Vince, I want to come to you because currencies is your wheelhouse. We've seen the dollar index, DXY, lose 3.8% so far this month. And I keep hearing about all these different metrics people are looking at when they look at the direction of the dollar. And one thing that comes up a lot is this idea of a chart that shows a budget deficit as a percent of GDP versus the dollar index. Are you hearing a lot about how this is going to give us a direction on the dollar?
Nah, not yet. It's a little too soon. I mean, everybody looks at the situation as, you know, we all know the budget deficit is going to be too high. You have the potential, if the Democrats were to pass the package that they're would like to do, that would put the federal deficit over $30 trillion. That's out there. We all know it. It's not really a part of the dollar conversation. If so, we wouldn't have seen the dollar rally in the last 3 months prior to this fall. What's going on with the dollar is essentially a couple of things. We're rolling over a haven trade that was part of the dollar for a long time, moving into metals, and you have a situation where the U.S. rates are at a negative yield. So yes, people are struggling as to where to put their money next, and dollar assets aren't the most attractive on a global scale at the moment. So people moving out of the dollar, I think that's the primary reason, which will continue until if and when we see some results out of this stimulus bill.
So Vince, what's the most important or interesting maybe thing you heard when you were talking to traders today? What's the buzz?
The buzz really is, as Scarlett mentioned a moment ago, everyone is expecting Jay Powell and the Fed to be dovish tomorrow. What Powell has shown us and what the FOMC has shown us in the past is that when fiscal stimulus has faltered, they've taken up the mantle, at least on an interim basis. So the talk now, and I think that's why the averages are off their lows and worst levels of the day, is even though the stimulus bill is really far apart, we don't expect it to be resolved in the next 24 hours or so. That leaves the door open for Jay Powell and the Fed to step in and just throw everything at it and be, I think, more dovish than we even expect. I think he will come through tomorrow. I think they will see the situation as they don't want to be part of the storm, and they don't want to pile on. Should the stimulus bill not actually be resolved by the end of the month, as the hopes are from the market. The last thing the market needs is the Federal Reserve pouring any kind of cold water on any kind of risk.
Dave, one final question to you, and a quick one here. Do investors care about nuance in earnings today, or is it just the company won or the company lost?
So far, it's looking more like the latter. Of course, if companies have anything to say about what they're expecting for the second half or into next year, that gets a lot of attention because so many of them have withdrawn forecasts in the last few months that if they're willing to go out on a limb now, investors take notice.
All right, Dave Wilson, thank you so much. We are eagerly awaiting your chart and song of the day at 3:30. That's coming up. And your stock of the day at 4. Our thanks as well to Vincent Signorella, Global Macro Strategist for Bloomberg. He, of course, contributes to the Macro Squawk Desk. That's real-time curated news, audio streamed directly through your terminal. Go to Squawk Go on your launchpad.
And the question is, Jason, whether Dave is going to pick a song from the late 70s, the early 80s, or the mid-80s.
I am loving this around the chart of the day. It's just so much anticipation.
Yes.
I love it.
A lot of tension, too.
I know. We've got a lot to anticipate. Coming up in the show, we're going to get an update on the virus from one of the biggest healthcare systems here in New York, wondering what he is seeing. This is the chief of infectious diseases at Northwell, about what's going on in the rest of the country. Co-founder of Square, very excited about that as well. And we're going to talk a little China as well, Scarlett.
Yeah, looking forward to that conversation, especially when it comes to China, because the person we're talking to considers himself an expert in negotiating with China when it comes to Hollywood movie releases. So there's so much to discuss there, especially with the delay of Mulan and all the other movies. Tenet, I think, has been shelved for, I don't know for how long. So let's get his take.
Yeah, we're going to get his take, and also we're going to talk about the NBA as well. So that's interesting to both of us. All right, let's quickly do the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number is $765 million. Eastman Kodak Company has won a $765 million government loan under the Defense Production Act, the first of its kind. The purpose, this is the surprising part, to help speed up domestic production of drugs that can treat a variety of medical conditions, loosen the U.S. reliance on foreign sources. Interesting. All right, let's head down to Washington now. Nancy Lyons is there with an update. Hey, Nance.
Hey, Jason. The use of federal force on protesters is the focus of a House Judiciary Committee today. Attorney General William Barr is defending actions by federal authorities in Portland.
We are on the defense. We're not out looking for trouble. And if the state and the city would provide the law enforcement services that other jurisdictions do, we would have no need to have additional marshals in the courthouse.
Barr also denied Democrats' accusations that he's working to back President Trump's law and order re-election campaign theme. Today's hearing marks Barr's first testimony before the House Judiciary Committee since he took office in February of 2019. Well, with fewer than 100 days until the election, the Trump campaign is spending more money in more states. But which states might surprise you? Bloomberg's Amy Morris reports.
President Trump is spending nearly all of his advertising money to keep states he won in 2016. A Bloomberg analysis of TV advertising data shows that's where more than 92% of the Trump campaign's state-based spending in July is going, toward states that aren't even considered swing states because the president won them so handily. Trump campaign manager Bill Stepien calls it protecting the map. The Biden campaign is also focusing on 7 key states that President Trump won 4 years ago. In Washington, I'm Amy Morris, Bloomberg Radio.
CES, one of the world's largest technology conferences, will be a virtual event next January due to the coronavirus pandemic. It is a reversal from May, when organizers said it would go on as a smaller gathering in Las Vegas. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Scarlett Fu. All right, so yesterday, Scarlett, we were sort of like chuckling a little bit about like, oh, DJ D-Sol spinning records in the Hamptons.
Chainsmokers.
Chainsmokers, sounds great. Outdoor party in the Hamptons. You know who was not chuckling? Andrew Cuomo. He did not find it amusing or funny at all. And in fact, there's an investigation into this party now.
Remember how you kept telling everyone to go to Bloomberg.com and look at the pictures from the event?
Yes.
I think Governor Cuomo's office did just that, and they were not happy with what they saw. You had about 2,000 people show up for this performance, 500 cars. People were dancing on top of their cars in a way that was not socially distant. So as a result, new probe, and I don't know. I mean, David Solomon's kind of in the middle of this. I mean, he was one of the featured performers, right?
Yeah.
We were talking about how Goldman Sachs had this great quarter and he was riding a high.
Yeah.
This knocks him back a peg.
It does. It does, in fact. It does indeed. And, you know, he wasn't the only high-profile person there, and he's not a public official. He's a public figure, but not a public official. There were some public officials there, too. The town supervisor is Southampton. We're talking about Jay Schneiderman. He was one of the performers at the event. And the Southampton village mayor, Jesse Warren, was the MC. Ooh. So this was really, apparently, at least meant to be on the up and up. And so you don't know whether it just got out of hand. But, I mean, the pictures do show, I have to say, especially that picture from the stage, it sort of shows everybody. It looks like a concert circa 2019.
Absolutely. And apparently there's a video online which makes it look like, you know, COVID never happened. And this is what's alarming. So alarming to Governor Cuomo, especially as he tries to get things back to some state of normalcy. Remember, New York City is not even back to normal phase 4.
Right. No, it's a really good point, and it's going to be something that we're going to talk about in just a minute with the chief of infectious diseases at Northwell Health, because New York has worked so hard not to fall back, especially given everything that's going on in the country. So it's an important thing. So that Hamptons party may come at a cost, literally and figuratively. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Mixed and fluctuating. That's what the S&P is doing right now. Right now, we've got the S&P up a point, a little change there, swinging between gains and losses as traders assess corporate earnings amid a resurgence in global coronavirus cases. Bonds rising with the 10-year up 11/30 seconds, the yield 0.57%. The Dow is down 52 points, lower by 0.2%. NASDAQ down 35, a drop there of 0.3%. S&P little changed as an advance in utility and healthcare companies tempered declines in commodity and technology shares. Gold up 0.5%, 19.52 the ounce. West Texas Intermediate crude down 1.1%, 41.11 the barrel. Nike is winding down operations at a facility in Goodyear, Arizona, marking an abrupt turnaround for a project meant to become a state-of-the-art plant for its Nike Air shoe line. Nike cites COVID-19. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly alongside Scarlett Fu here with you as we try and figure out all the different inputs, as they say, into this market, into this business world. And the primary one for so many of us is, of course, the state of the virus. We've got just the expert to help us make sense of it all, Dr. Bruce Farber, the chief of infectious diseases at Northwell Health. He joins us on the phone from Manhasset, New York. Dr. Farber, really nice to have you back here on Bloomberg Business Week.
Thanks for having me, Jason.
So tell us, first of all, New York City and its environs, the tri-state area, feels pretty different from what we read in the headlines and as we talk to colleagues and friends and family across the country. What's the state of play where you are?
Yeah, it's dramatically better than it was, obviously, months ago, and it sounds like it's dramatically better than it is in many parts of the country. We're sort of in the eye of the hurricane in the sense that things are quiet. Our healthcare facilities have single-digit admissions of COVID patients, not zero, but generally 1 to 3 per day. The total hospital census is dramatically down to double digits. Many of the chronic patients who are still around are severe, long-term survivors that are struggling to get off ventilators. And the number of sick patients being admitted is dramatically lower. So things are good. Elective surgery has restarted. People are screened regularly before coming into the hospital. When they come into the hospital for even treat and release things, they're often screened, and they're screened before any elective surgery. So things are good. They're certainly not normal, and I don't anticipate they will be for a long time.
You know, the New York Times has a map on its website that tracks the number of cases across the country, and the Northeast, New York, New Jersey, Connecticut, and New England, are in the best position, right? We're light yellow versus dark red for Florida and California. However, New Jersey's transmission rate, according to Bloomberg, a story on Top Worldwide, has risen to 1.14, a 13-week high. Dr. Farber, do you think it's inevitable that New York City will also see a rise?
I think it's, I don't know inevitable, but it's certainly a risk, and I think we're preparing for it. It's hard to stay locked down, number one, and it's hard to prevent people from reintroducing the virus from other parts of the country, and that's a reality. Although, as you know, there's quarantines for, 31 states of people coming in. They're impossible to enforce. They're difficult to monitor. And we see a lot of people coming up from Florida, who are nervous, and other states who have relatives and other people in the Northeast. So, inevitable, I don't know, but it's certainly a risk, and it's hard to imagine that there aren't going to be bumps along the way.
Well, it's interesting, Dr. Farber, and Scarlett raised this as we were preparing for this segment. Very rightly, we were just talking about this party in Southampton, that the CEO of Goldman Sachs was the DJ for, and, it upset the governor of New York pretty tremendously. There must be a lot of heightened interest and concern on the part of public officials. You talk to them, I know, you and your colleagues do. How are the public officials feeling about kind of where we are, and what are they most worried about?
I think people let their guard down, quite frankly. I'm always amazed how intelligent people know what they should be doing, but, a few months go by, they don't hear as much, the hospitals aren't busy, and they let their guard down. And it's not right. I agree with the governor in this instance. You cannot have large parties. You can't open up these bars. You can't have crowded restaurants and crowded parties and weddings and concerts. We're just not there yet. And I don't know when we're going to be there, but whenever that happens, there's going to be clusters. We've certainly seen clusters just in a couple of local retirement parties and other birthday parties. Sometimes they're outside, but most often they're in enclosed spaces where people take off the mask to eat and drink.
Okay, you can't have large parties, and few people would compare school to partying, but can you have kids go back to school then?
So, as you know, it's an extraordinarily complicated issue, but I would summarize it by saying the safety of the schools is going to be predominantly dependent by how low the transmission rates are in the community in which the school is located. So clearly it's not going to be safe to open schools in southern Florida and Houston at the present time. In New York, that's a different story. I mean, it's as safe as it's going to be. At some point in time, we're going to have to open schools. We're not going to have closed schools for years and years. And no matter how optimistic you are about a vaccine, I don't think there's any realistic way this thing is coming to an end within the next year, even if we have a good vaccine. So I think it is safe to carefully open schools, but it's not going to be fail-proof. And there are going to be outbreaks. There are going to be little clusters. They just have to be whacked down when they occur. You have to have good protocols. You have to have careful monitoring. You have to have available testing. And you have to be prepared that it's not going to be perfect.
And we've only got about a minute left, and then we're going to continue the conversation. Does that mean schools may open and then close and open and close?
Yes, I think that means that. And you'll see, hopefully not widespread opening and closing, but yes, there'll be schools and classrooms and parts of a school that may close. I mean, there are pods, Good programs have little pods where the kids don't interact with other pods. And that way, when there's a little outbreak, it'll be limited to a relatively small number of people or teachers. And yeah, I think that's the new norm.
All right, we're going to continue this conversation because I know Scarlett and I both want to talk about sports and everything that we've seen so far this week with Dr. Bruce Farber. He is the Chief of Infectious Diseases at Northwell Health, joining us on the phone from Manhasset, New York. And Scarlett, interesting to hear his perspective on schools because I know that's something you and I talk about all the time.
Well, yeah, I mean, we need to come up with some plan before next month. And I know different schools are getting ready to announce their reopening plans because they have to submit something to the New York Department of Education.
Yeah, and we are still waiting, and I think it's in the next couple of weeks where we'll hear from, in terms of the state of New York, where you and I both live, what Governor Cuomo is ultimately going to say. It's going to be region by region, so everybody's on pins and needles for that. Much more ahead. You're listening to Bloomberg Business Week.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, we're going to continue our conversation with Dr. Bruce Farber over at Northwell Health. He's the chief of infectious diseases. I don't know why I have such a hard time saying that, Scarlett. We got to talk about sports.
We absolutely do, because I'm just looking at a headline here. 4 additional Marlins players test positive. 17 total reported cases among the team. And you know they're based in Miami, and we know Miami's a hotspot. So how do you go from there? It really feels like the season is doomed.
Yeah, we're going to ask him what he thinks. I wonder if he's a baseball fan. We're going to find out. Charlie Pellet, you're a baseball fan, aren't you?
Sort of, but I've got some news about baseball. Governor Cuomo is offering up New York State for any Major League Baseball teams wanting to play safely, in the governor's words. Says we could set up a protocol inviting teams to play in New York. Markets trading lower since our last update. We've got the S&P turning down by 1 point right now. Bottom line, little change. Stocks are fluctuating as traders assess corporate earnings amid a resurgence in global coronavirus cases. Bonds rose, the 10-year up 10/30 seconds, yield now 0.58%. Your equity markets lower across the board. As I mentioned, the S&P down now by 1 point. Little change there and fluctuating. The Dow is down 67 points, down 0.3%. NASDAQ down 48, a drop there of 0.5%. Crude oil, West Texas Intermediate, down 1.4%, 41.01 a barrel. And gold, right now, an ounce of the precious metal up 0.5%. $19.52 the ounce. Health experts continue to mandate mask wearing as one of the most effective ways of curbing the spread of coronavirus. Carla Friedman, Johns Hopkins Executive Director of the Foreign Policy Institute and Associate Research Professor of China Studies, was interviewed this morning on Bloomberg Television.
It's been politicized in the United States, that is mask wearing, and so people aren't wearing masks, and you can see that all over the place. But places like New York, which have used strong enforcement measures, have seen very significant improvements to the situation and are able to manage the virus.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. 3M shares lower after earnings, leading the Dow lower. 3M down now by 4.6%. Pfizer, also a member of the Dow, it is climbing after the drug maker raised its earnings forecast and began that later stage trial for a coronavirus vaccine with its German partner, up by 4%. McDonald's after earnings down now by 2%. Homebuilder D.R. Horton now lower after earnings, down by 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Let's bring back our guest right now. We are just so excited to get this conversation going. He is Dr. Bruce Farber, Chief of Infectious Diseases at Northwell Health. And we've talked about schools. We've talked about the transmission rate rising in New Jersey, what it means for New York City. Dr. Farber, I want to ask you about sports. Who's your team?
The Mets.
The Mets. Okay. Well, the Mets so far have not gotten entangled in this Marlins, Yankees, Phillies situation where games have been canceled, and now there's 17 total reported cases on the Marlins. How do we get this? Well, let me start all over. I look at what happened in South Korea. Their teams have been able to play. They were in a bubble, and now they've started to allow some baseball fans back into the stadium. We're asking questions about whether the MLB season will be completely terminated, given what's happening with the Marlins. How could they have done this better? Did they just need to go into a bubble that they refused to do?
Yes. I mean, in essence, and I've been involved, for full disclosure, with advising the NHL. And first of all, it's extraordinarily difficult. And secondly, South Korea does not have the background of community COVID that South Florida has right now. And thirdly, you have to be really committed to vigorously enforcing that bubble. And any leaks are basically catastrophic. And I think that's what we're seeing. I think it's going to be very difficult for any collegiate sport to be played. I know the NCAA has not made a final determination, is leaving it to their conferences, but I don't think anybody feels good that that's going to happen for any sport, at least in the fall. I think football is going to have an incredibly difficult time pulling this off. Basketball, I thought had a chance. Their bubble seemed to be very secure, but, it's very difficult to maintain that bubble and to maintain people not cheating, having contacts, visitors, somebody bringing it in, and then it's all over.
Yeah, because it just takes one, right? In many cases.
It takes one, exactly. And I would have thought baseball would have been the easiest for the obvious reasons in terms of, then it's not like football and basketball.
Yeah, the players aren't up in each other's faces or anything. Exactly. It's a naturally social distance sport. Tell us a little bit more about what happens with the NHL. I mean, are they bubbled? They're certainly in full gear, right? And they all have the fishbowl, the shield, so that they're not breathing on top of each other.
They do, and their time facing each other is actually pretty limited because the game is so fast-moving, and the periods are relatively small, and there are 5 men coming in and out of the games very quickly. The issue is really not, I don't believe, on ice. I think the issue, like with the baseball players, is much more important what's happening off the field than on the field. The field you can control and is probably reasonably safe, but boy, it's a long time to put people in a bubble, and they have to be willing to buy into it and really not cheat at all.
Yeah, well, and clearly that was one of the many things that broke down between the players and the owners on the baseball side. So let's talk briefly, if we can. Only got a couple minutes left here, Dr. Farber. We could talk to you all day. Vaccines. Dr. Fauci, he's got some optimism over something happening in the fall, late fall. How optimistic are you that we'll see a vaccine in any meaningful dose from a broad perspective in 2020?
Well, we're all optimistic that the messenger RNA vaccines will be much easier to produce in large quantities than previous vaccines if they work. I'm still cautiously optimistic, but I think it's really a stretch to look at 2020. I think realistically, end of first quarter 2021 would be a realistic stretch goal. We still haven't seen the results of a clinical trial. It takes time. You have to see, if the vaccine is extremely effective, then the results will be forthcoming very quickly, particularly if it's tested in a hot zone where there are a lot of people. They're testing in Brazil, and, but if the vaccine is not as effective as we hope, then it could take a long time, even if it has moderate success. So I don't think we should count on 2020. I mean, granted, that would be a phenomenal surprise if it happened.
All right, we're going to leave it there, and we are going to have you back very soon. I really appreciate the insights. I feel like I learned a lot from Dr. Bruce Farber, Chief of Infectious Diseases at Northwell Health, one of the biggest in the state of New York and its environs. He joined us on the phone from Manhasset, New York. Scarlett.
And one thing that we didn't talk with him, but I don't know that he'd be the person to give the answer here, is that there are a lot of people who are concerned that even when a vaccine becomes available, they don't want to be the guinea pigs. They don't want to be the ones getting the vaccine in the first round. They want to see how it all plays out before they buy into it.
Yeah, we had a guest just last week from Johns Hopkins saying that exact thing. She's a sociologist, and she essentially said, look, there are a lot of people who right now are saying, very smart people who generally believe in vaccines are like, I'm not so sure. I know some of them. I've talked to people about this. It's going to be a fascinating turn. All right, let's get down to Washington now. Nancy Lyons is there with World and National Headlines. Hey, Nancy.
Hey, Jason. Talks are continuing on the latest Republican pandemic relief package. Democrats say they are still far from a deal. Some of the sticking points include unemployment insurance, aid for state and local governments, and assistance for renters and homeowners. The pressure is for something to pass, with the added federal unemployment benefits running out and a federal eviction moratorium having expired. Well, after winning some praise for recently taking a more realistic assessment of the pandemic, President Trump shared a viral video on Twitter loaded with false and misleading claims about the virus. Bloomberg's Martin DeCaro with the latest.
The video shows what appears to be a group of doctors in white coats.
Because we feel as though the American people have not heard from
holding a news conference outside the Supreme Court.
Americans are riveted and captured by fear at the moment.
And among their bogus claims, the doctors say hydroxychloroquine works as a preventive cure, the same drug President Trump without evidence once said could be a game changer. Social media platforms are removing the video, but one version was viewed 13 million times before it was taken down. In Washington, Martin DeCaro, Bloomberg Radio.
President Trump last night also sent out several tweets attacking the credibility of the nation's top infectious disease expert, Dr. Anthony Fauci. On ABC's Good Morning America, Fauci was asked about the attacks.
I don't tweet. I don't even read them, so I don't really want to go there. I just will continue to do my job no matter what comes out.
Fauci says he will do his job because we're in the middle of a pandemic, and dealing with that is what he's been trained to do. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Well, we talked about the Hamptons from one perspective earlier in the hour. Scarlett, let's talk about somebody who probably was too busy making money to go listen to DJ D-Sol spin his latest mix of Fleetwood Mac tunes. We're talking about Boaz Weinstein, well known in the hedge fund world, a 90% gain after he decamped to his summer home there.
90%. I mean, that is unbelievable. We were just talking with Hema Parma yesterday about how hedge funds had a disastrous first quarter, and very few of them have been able to pick up the pieces in the second quarter, and this guy is printing money. And his backstory is so interesting, right? Because he was a chess master at age 16, a managing director at Deutsche Bank at age 27, and then he lost $1.8 billion just before he then spun out into his own business. It's an incredible story. It feels like it's a Hollywood movie.
Totally, yeah. I mean, it's like the Wolf of Wall Street with a twist in some ways. There's a whole poker thing. He's got a poker room at this compound of sorts that he has, a gated estate out in Sagaponack, replete with a tennis court pool, and as I said, a Vegas-style card room. So
he didn't need to go to the party. He didn't need to go to the concert on Saturday.
He did not. Yeah, he had his own party going on, and his investors are really, really happy. And I have to say, this is something where this is why you pay hedge funds a lot of money, is to make big bets to some extent, but also to take advantage of these dislocations and this volatility.
I mean, he could easily be 5-50 at this point if you have a 90% return.
Yeah, totally. And you have to think he's probably, when he's bringing on new investors, probably cutting them a different deal, or maybe trying to recut some of his existing investors. So not surprisingly, the most read story on the Bloomberg today, Kathy Burton and Sridhar Natarajan. He's going to be along with us later, so we may ask him about this and what went on with DJ D-Sol
on Saturday.
Exactly. That's coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks continue to meander. Little change in the S&P ahead of the Fed decision tomorrow. Stocks, though, fluctuating. Traders today assessing corporate earnings amid a resurgence in global coronavirus cases. After earnings, 3M is down 4.5%. Shares of D.R. Horton, that's the home builder, down 0.4%. McDonald's lower now by 2%. S&P is down half a point. Little change there again. Has been swinging between gains and losses. Right now, red on the screen. We've got the Dow down 55, down 0.2%, while NASDAQ lower by 50. That is a drop of 0.5%. 10-year up 11.30 seconds with a yield of 0.57%. Gold up $13 the ounce now, higher by 0.7%, 19.55. And West Texas Intermediate crude down 1.4%, 41.03 for a barrel of WTI. Again, recapping here, equities lower, little changed. S&P will call that flat. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, let's dive into the magazine. Joel Weber, the editor of Bloomberg Business Week, is with us from Massachusetts, as is Christina Lindblad. Where have you been, my friend? We miss you, stalwart of our weekend show, global economics editor for Bloomberg Business Week. She joins us on the phone from New York City. So happy she's with us. And Joel, I want to start with you because this is a great global economics story, and this is just right in the wheelhouse of the stuff we love to cover, looking beyond sort of our domestic woes here and understanding how this virus and how the global economy is all panning out.
Yeah, plenty of woes here stateside. Other countries also have woes, and sometimes it's not even related to the coronavirus. And we're talking about Argentina specifically here, which is a topic that Christina has actually covered for years, because Argentina has been sort of a train wreck in many ways. But the main thing that we kind of unearthed in this story that I thought was really interesting was that, the coronavirus is obviously making things difficult for businesses, but Argentina on its own has also become incredibly difficult for doing business. And companies, virus aside, are actually pulling the cord and leaving. Christina, what were some of the examples that we found in this story?
Well, one of them is LATAM, which is an airline that's headquartered in Chile, which compared to Argentina is a much more policy stable country. And then a whole slew of automakers and auto part companies, including Axalta, which is a Warren Buffett-owned company. And then besides the ones that are leaving, there, for example, companies like Ford and Volkswagen that have stopped investment plans and have put them on ice for now.
So those are companies that don't see much upside in continuing to do business in Argentina. Investors have also learned the hard way that perhaps it's not a great thing to lend to Argentina either. Are there still investors who think that it's worthwhile to make an investment to that country, given the track record here? Argentina, of course, deciding not to repay its debt.
That's right. It's ninth default, and it's currently trying to work out terms with bondholders. I think until it does that, it cannot access international markets. Also, it's in the third year of a recession, and this year the economy is forecast to contract by 12%, which is the most on record. So there aren't too many reasons right now, I think, that anyone would want to be lending money to Argentina.
But it's also, I think there's a certain horizon which, Argentina has tried to establish with the international community, like the 100-year offering that they had. So, but I do think it's profound that, as hard as the U.S. is getting hit, as hard as places in Europe has been hit, and we're seeing Brazil reel. The thing that emerges with Argentina is just that we have these real kind of like ingrained problems that just make it a very difficult place to do business, which is why it ends up getting ranked at the bottom of all of these things. So then along comes a virus and it makes it all the worst. And even then, like Christina, like Argentina was among the first to actually impose lockdown restrictions.
in March,
and what's
they're
yeah,
now
exactly.
gradually, yeah, issue with dealing with the public health emergency.
And so, help us understand the labor side of this. I mean, the labor unions, I feel like somewhere in my memory, we've talked to you about this. As Joel said, you've been tracking the Argentine economy very closely, you and your colleagues at Bloomberg Business Week. I mean, the whole labor union side of this is a really important one that everybody needs to understand.
Well, they've been traditionally powerful for a very long time, but their power is always enhanced under left-leaning governments, particularly the Peronists, which have a history of basically of co-opting the labor movement. And right now, in some situations in other countries, when you have deep recessions, labor becomes more pliant, right, and is willing to give concessions. That's not happening in Argentina because they know that they have a government that is basically kind of backing them up. And the government has, instituted policies like, preventing companies from doing layoffs, and there have been incidents in which unions have had very hard and even often sometimes violent relations with management, and that has been getting more intense lately.
We talk a lot about Argentina's history. In the story, you cite that the country has spent a third of its modern history in recession, and growth has been hard to find over the past decade. They keep changing leaders. There's a new leader right now, Alberto Fernandez, who took office in December. He, of course, is trying to drum up the happy talk. He talks about how Argentina continues to be a country that structurally has a lot of natural wealth. What is the source of Argentina's natural wealth? What are its resources that render it wealthy?
It's one of the world's greatest agricultural producers. It has oil down in the south, which actually has not really, been able to really develop these fields through hydraulic fracturing, and especially now that will be difficult with the state of the market now. And it does have a consumer market that is, until fairly recently, people were pretty well off by the standards of Latin America. So, but a lot of the problem is there's just policy insecurity. All the time things are changing. Right now, businesses and consumers, I have to say, are having to cope with currency controls that basically there's a tax was imposed this year so that if you want to buy a ticket to travel abroad, you're paying a 30% tax. If you want to buy dollars to put them in deposit, because you're basically hedging against the continued devaluation of the peso, that also a 30% tax. So it's just really becoming companies are just saying enough.
Yeah.
We can't operate here with all these constraints.
Well, and to Scarlett's earlier question, investors, it feels like, or at least a lot of investors are saying, enough is enough as well. You really
I don't need this drama.
Stomach. Yeah, exactly. Yeah, got enough in other places. All right, Christina Lindblad, great to hear your voice, Global Economics Editor for Bloomberg Business Week. She joined us from New York. Joel Weber, the editor of the magazine, joined us from Massachusetts. And we're going to talk more about economics coming up, Scarlett, because the labor market, certainly it is on the mind of Jay Powell. We're going to hear about that tomorrow for sure.
And it's on the mind of Washington policymakers as well, right? They're still trying to figure out how much additional enhanced jobless benefits to give folks. $600 is what they're getting right now.
Yeah.
The Republicans came back with $200 a week.
Yeah. We'll see where all that ends up. Well, for those of you listening in New York, D.C., San Francisco, watching on YouTube, Bloomberg Business Week continues right here. We are, as I said, going to talk some economics. If you're listening on Bloomberg 106.1 in Boston, Bay State Business, that is coming up next. Much more to come here on a Tuesday edition of Bloomberg Business Week, covering all you need to know in the business world. This is Bloomberg.
from Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, July 28th. We've got the Dow, the S&P, NASDAQ, all trading lower right now. S&P is down 2 points, down by about 0.1%, has been fluctuating. The Dow is down 64. That is a drop of 0.2%, while NASDAQ is down 57, a decline there of 0.6%. Traders are assessing corporate earnings amid a resurgence in global coronavirus cases. Bonds rose, the 10-year up 11/32, the yield now 0.57%. S&P little changed as an advance in utility and healthcare companies tempers declines in commodity and tech shares. Pfizer climbing after the drug maker raised its earnings forecast and began a later stage trial for a coronavirus vaccine with its German partner. Shares of Pfizer, they're up now by 4.5%. Federal Reserve policymakers have begun their two-day meeting with an announcement expected tomorrow. We'll have that for you live on Bloomberg Radio. Charles Plosser is a former president and CEO of the Federal Reserve Bank of Philadelphia.
Now they're talking about a new strategy where they're going to plan on overshooting inflation. Well, I mean, they haven't even been able to get it to 2% with zero interest rates for 7 years. So what's wrong? That's the elephant in the room here that the Fed needs to address, not some refined view of inflation averaging versus inflation targeting or whatever.
Airline stocks are moving higher today. JetBlue says it sees the industry recovering in 2 to 3 years. It also says it won't be operating any flights that are not cash positive. JetBlue shares, they're up now by 1% among some of the other big U.S. carriers. UAL is up 3.8%. American is up 4.1%, and Delta flying higher now by about 2.5%. Bank of Nova Scotia is planning to keep most of its headquarters employees working from home for the rest of the year. Amid efforts to stop the spread of COVID-19, Scotia Bank will let a number of head office employees return earlier, mostly in its capital markets division. Recapping, equities lower, S&P down 2, a drop of 0.1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Scarlett Fu here, in for Carol Masser with Jason Kelly on Bloomberg Business Week. We now want to bring in Jed Kolko, who is chief economist at Indeed, which is a search engine for job listings. And Jed, we've talked to you several times in the past about the labor market, and we'll get to that. But I want you to weigh in here first on one of the issues that pervades the policy discussions over whether to continue the enhanced jobless benefits. At issue is whether we continue to give people $600 a week or less, given the environment we're in where people can't work because of COVID-19. There's this thinking that the additional $600 a week keeps people from seeking work because they get paid more being on the dole than if they were working. You have a PhD in economics. Is that the case? Is that something that disincentivizes people from working? Is that what we're seeing now? I would argue that there are not a lot of jobs available right now. It's the virus that's keeping people from working.
Scarlett, good to talk to you again. I think the main thing holding back the job market right now is that there's not enough jobs and not enough hiring. We see on our site, Indeed, that job postings are down by more than 20% relative to the trend last year. And in lots of industries, they're down by much more than that. They're down by half in hospitality and tourism. If there aren't enough jobs that are hiring, then the main concern shouldn't be whether the unemployment benefits might be discouraging people from working. People want to work. If their health insurance depends on it, in a pandemic, people definitely want to work. So the biggest issue is the lack of demand, not workers being unwilling to go back to work.
So, Jed, tell us more about what you're seeing through the data, because one of the reasons we love talking to you is exactly what you alluded to, which is you have a window into the hiring environment and so many of the levers being pulled or not that few do. So tell us more what you're learning.
So we track very closely what's happening with job postings on our site. We see the vast majority of job postings that are up from lots of different sources. There are some industries where hiring has fallen with little rebound. So hospitality and tourism, of course, the hardest hit sector. There are some sectors, though, that saw a huge decline right away, but have rebounded. The types of businesses that shut down and then reopened. So beauty and wellness jobs, like hair salons. Lots of retail jobs have seen a rebound in hiring. But most concerning is that there are other sectors that were not the ones shut down by the virus. Tech, finance, the types of jobs that typically can be done from home. In those sectors, job postings are down by more than a third still. Those are sectors that aren't as volatile. Those are sectors where the hiring depends more on what companies expect the economy is going to look like a year or two from now. And that's a red flag in the labor market today.
And those are high-income jobs as well. I wonder, when you look at job postings, things were looking pretty good from May until about early June. And then since then, we've seen this wave of infection sweep across the nation, certainly parts of the South and parts of the West. Have we seen postings move as a result of this latest wave?
Overall, job postings have been gradually improving from its worst point in early May, but the mix of jobs has changed a bit. In the past few weeks, the types of jobs that have really driven that increase in job postings are some of the virus-related sectors. So we've seen an increase in jobs in pharmacy, medical technicians, and nursing, as well as insurance. There are obviously lots of insurance claims that will need to be dealt with, as well as cleaning and sanitation jobs. There are other kinds of jobs where we haven't seen much improvement in the past few weeks. The trend is flat or even down in a lot of office jobs like legal, IT, help desk, accounting, and marketing.
And Jed, as we look across this sort of surge, we don't even think it's a second wave at this point. That still may be coming. And as you look across geographies, are you seeing the effect of essentially re-shutdowns yet, or is that still to come in terms of the labor market?
Good question.
Yeah, so we are starting to see the trend in job postings weakening a bit in the types of metros that have experienced a surge this summer. Notably, job postings in Miami started backsliding in the past couple of weeks. In most places, though, we have seen improvement, especially in smaller places. Smaller towns, small metro areas, they've seen a bigger rebound in job postings than some of the larger metro areas where more people can work from home. One of the big differences across places is that in the types of metros where people can work from home, they are not going to restaurants, they are not shopping. And so in some of those expensive tech hubs, finance centers, in those places like New York and San Francisco, that's where retail jobs and restaurant jobs are suffering because their customers aren't out and about.
Yeah.
They're able to work from home.
Right. That's so interesting. Yeah, these knock-on economic effects and labor effects are really fascinating and candidly troubling when we really break it down. Thank you so much for your insights. We really appreciate it. Jed Kolko, Chief Economist for Indeed, joining us on the phone from San Francisco. And I think about this a lot, Scarlett. I mean, you and I are fortunate to live in very nice towns in the New York suburbs and work in New York City. But we've both seen, I think, our own lives and behaviors of those around us dramatically change, like where we shop, when we shop, and how much we spend.
Everyone's lives has been disrupted by this virus. And I wonder as well, with the job market being the way it is, typically people tend to go back to school in this kind of environment, right? They get another degree if they can afford it, or they take out loans for that. We have no idea what school will look like. So what does that mean in this instance? You don't have a job. You would want to go back to school. You're not going to go back to school because it would be remote. What do you do?
Yeah, I know. And the knock-on effects of all of that, even the not going back to school, and you think about these college towns and everything else.
Yeah.
All right, much more to come here. Let's head down to Washington now. Nancy Lyons is there with some headlines. Hey, Nancy.
Hey, Jason. Attorney General William Barr, in testimony before the House Judiciary Committee, is denying that he's running the Justice Department to promote President Trump's interests and his reelection campaign. Bloomberg's Irv Chapman has more from Washington.
Barr defended his dispatch of federal forces to Portland, Oregon, accusing city and state officials of policing failure.
Since when is it okay to try to burn down a federal court? Breaking windows and firing industrial-grade fireworks in to start a fire, throw kerosene balloons in and start fires in the court. Is that okay? We are defending the courthouse. We're not out looking for trouble.
Committee Republicans scoffed at references to peaceful protest and played a video montage of violence, fires, and looting in the wake of recent demonstrations. In Washington, Irv Chapman, Bloomberg Radio.
Joe Biden is announcing a series of steps designed to bridge racial economic gaps in the U.S. with proposals on racial equity that touch on housing, infrastructure, workforce training, retirement savings, and federal procurement. He's discussing his economic plan in a speech this afternoon in Wilmington, Delaware. Some possible progress on diagnosing Alzheimer's. Researchers say an experimental blood test is able to distinguish people with Alzheimer's from those without the illness. NASA is gearing up for Thursday's planned launch of the Mars rover Perseverance. The plan is for the $2.7 billion rover to land on Mars, collect rock and soil samples that would be space-mailed back to Earth for examination. The goal is to figure out the origin of life. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Nancy, thank you so much. The most read story on the Bloomberg, not surprisingly, we love people making money and we love people giving away money, Scarlett, if it's fair to say, about the typical Bloomberg terminal customer. Mackenzie Scott, you may know her better by her married name, her former married name, Mackenzie Bezos. She has donated about $1.7 billion with a B to causes related to racial equity, climate change, and public health. She disclosed this in a blog post on Medium.
Good for her. Good
Yeah.
for her. I mean, that is someone who's doing something with her money in a good way. And we should mention, of course, for context here, she's worth $60.4 billion. She ranks number 13 in Bloomberg's billionaire index. So she's got some money to spare, but nevertheless, it's impressive. And of course, we know that she signed the Giving Pledge to donate the majority of her fortune in her lifetime. So I think she's getting started on that.
Well, and one of the fascinating things about that $60.4 billion, that stake was worth, so that's Amazon shares, primarily. That stake, when they got divorced, was worth $36 billion. So that's owing to this massive run in 2020 of Amazon stock, which, you know, we've watched with just sort of fascination.
Widening eyes.
In many ways, widening eyes is a very good way to put it. So it's interesting, though. I mean, she is definitely, as you say, out and about, signed the Giving Pledge. So certainly watch this space, because with that sort of fortune, and listen, she is, we don't have her age in here. I'm going to look it up as we're talking, but, you know, she's got a lot of time ahead of her to spend, and she's obviously very thoughtful as well about it. So interesting to see what she ends up doing well with all of that. And you know, it's a serious thing.
She's the second wealthiest woman in the world. There was a great joke that the Oscar presenters poked at Jeff Bezos during the Oscars. They were talking about the Marriage Story, and they said, you know, Jeff Bezos looked at that and was like, oh, it's a comedy.
Yeah.
Anyway.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all on the minus side. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading lower today in quiet trade. Dow's currently down 103 points. S&P's dropped 10. NASDAQ is lower by 100. The U.S. 10-year yield at 0.58%. WTI crude futures are down 1.6%. Gold is trading higher by 14. And transports fall 75 points. Leaders to the upside in the Dow, Pfizer, Walgreens, and Procter & Gamble, while 3M and Dow Inc. led to the downside. After earnings, National Oilwell fell 11%. Martin Marietta dropped 4.8%, and Pfizer rose 4.5%. In other news, Kodak soared as much as 350% after the company received a $765 million government loan for generic drug production. Wrapping things up, some of the names reporting after the bell tonight include AMD, Amgen, eBay, Visa, and Starbucks. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Lots to keep us busy after the closing bell to hear live breaking news over your Bloomberg-type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Well, thank you so much, Charlie. One of the most valuable, I dare say, things that Bloomberg Business Week has been doing is known as the Small Business Survival Guide. Everything that's going on with the pandemic and the crises, the economic crises that this country is facing, this is all the more important, especially right now as some of these relief packages are up for renegotiation and extension. Let's get into what's going on. The latest with Dimitra Kesanides, editor for Bloomberg. She joins us on the phone. She's overseeing this whole effort. Also joined by Nick Leiber. He is a contributor to Bloomberg Business Week. He joins us on the phone as well. So, Dimitra, remind us what you're setting out to do and why this is even more critical right now, especially when it comes to PPP, the Paycheck Protection Plan.
Sure. Thanks, Jason. We're 5 months into this pandemic here in the United States, and I think that what we set out to do initially and continue to set out to do is to just provide as much useful, helpful information to small business owners, seek out sources of funding that they might be able to tap into, tell their stories, and really just provide a community of sorts, because I think what we're seeing now is that 1 month, 2 months, 3 months, there were very challenging times, and a degree of fatigue and even discouragement and maybe even giving up is starting to set in. And it's been very, very challenging. I mean, it's also very hard to see now because of the resurgence and what's happening, what people can reliably count on in terms of the next steps they have to take. We ran a story, Bloomberg News did today, not Business Week, about the whiplash effect that businesses in California are feeling. Open, don't open, reopen, don't plan. What do we do? I mean, it's really taking its toll. And those are investments at every stage that sometimes at this point, some businesses are going to have to make the calculation, and they're going to realize that there's no more money they have that they can spend on trying to set their business up for reopening, and they might have to confront a very hard reality. So we're trying very hard to give them information that will help them and guide them in those choices and make them feel less alone and just helpless.
All right, so let's find out what the state of play is right now. Nick, when a company, a small business is struggling, and let's say they do want to apply for some of these loans through PPP, is there still money in that program?
Hi, thanks so much for having me on. There is still money. I think there's over $100 billion left in the PPP program, and the deadline for the PPP program to apply has been extended until August 8th. One really helpful thing to do if you're interested in PPP, and I encourage you to research it and consider it, I strongly encourage you to do so, is to find a lender that is willing to work with you. Depending on the state that your business is based in, there are different lenders you might not think of right away. You should really think about something called a CDFI. You should Google it. There's one that serves New York, New Jersey, and Pennsylvania called Pursuit Lending, and their mission is to work with really small businesses that didn't have much luck at banks, at larger traditional banks, and help them get loans, including PPP loans. So it's just something to keep in mind. There's still money, and the deadline is August 8th.
And Nick, what were the problems that those businesses were typically running into with some of those more traditional financial institutions? Just not getting attention, or what was going on?
That's a great question. Well, I think about the hardware store owner down the street from where I live in Brooklyn, and what he told me is, he went to a big bank, and it was very hard for him to get sort of the time of day. So two things can happen. One, the loan that you're asking for isn't big enough really for them to care about giving you a loan. Like, you want $10,000. That might not be a big enough amount. You want $20,000. The other problem is you may not have an existing relationship with a bank. So you may go online, banks you've heard of, and you don't have an existing relationship. And they say, sorry, we're not helping people right now with PPP who don't already have an existing relationship. So that's why it's useful to do some research and try to find lenders that are willing to work with you, both for relatively small loan amounts and also if you're a first-time customer. And those entities exist.
Right.
So my other question here is that these are loans, but they can turn into grants provided you meet certain requirements. Do we have any idea of how many businesses were successful in turning these into grants?
That's an ongoing process. Many have, many will likely see their loans turn into grants. But as the head of Pursuit said to me, I think it was yesterday, look, if the worst thing happens and you don't have your loan forgiven, you can simply return it. That's also something to keep in mind. These are loans that are 5-year loans at 1% interest. And if you find that, okay, right now I think the forgiveness terms have gotten increasingly more favorable. So if you spend 60% of your loan on payroll and you show that you did that under the rules, then the loan is forgiven, it becomes a grant. But even if you're not able to do that and you take the loan and then you find you can give the money back.
All right, really good information, and check out all of our work there, the team's great work, Small Business Survival Guide at Bloomberg.com. Our thanks to Nick Leiber and Dimitra Kesinides. Much more ahead. This is Bloomberg Business Week.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, it's all happening. Coming up, the chart of the day, the song of the day. A prediction has been made by Dave Wilson that Scarlett will get the artist, but not the song or...
He said I wouldn't know the name of the song, but I would know who it is, and I would have heard it.
Yeah.
So I'm thinking 80s.
Yeah.
Because I pride myself on my 80s knowledge.
There you go.
Trivial
All right.
Pursuit 80s, I'm on top of it.
All right, good to know. We're going to see what happens in just a minute. But first, Charlie Pellet, I believe, because I saw him go behind you at some point, I think he's back in the office. He's the happiest guy in Hollywood.
I'm back. I love coming in. You know, my wife's away. What do? I come to work. Can't wait to get back in the office. Here's what's going on. The Dow, the S&P, NASDAQ, they're all trading lower. 28 minutes to go ahead of the closing bell right now. We've got the S&P down 9. That is a drop there of 0.3%. The Dow lower by 103, a decline of 0.4, and NASDAQ down 84, a drop there of 0.8%. 10-year up 11.30 seconds. The yield right now 0.57%. Gold up 0.9, 19.58 the ounce on gold. Crude West Texas Intermediate down 1.5%, $40.99 a barrel. Stocks are lower as traders assess corporate earnings amid a resurgence in global coronavirus cases. It is 3:32 on Wall Street. Time now for the Small Business Report. Here's John Tucker.
We first spoke to Hadley Douglas back in May. She and her husband own Boston's Urban Grape, a curated wine and liquor store. They've been on a whirlwind since our last talk. Hadley, good morning. Fill us in what happened to your business during some of the protests in the area earlier this year.
On the night of March 31st, there was a really amazing, beautiful, peaceful protest in Boston. But unfortunately, about 6 hours after the protest ended, a bunch of kids used basically the moment of having the police with their eyes on other parts of the city to break into a number of businesses in the South End where our business is located. I certainly would not call it violence in any way. It was just kind of kids being kids. They sledgehammered through our window. They stole our cash drawers. And we knew immediately that because we are kind of a beloved business in Boston, that what happened to us was going to be very easily misconstrued. And we knew we needed to get out right in front of that and say, listen, what happened to us last night had nothing to do with the peaceful protest. We are in complete support of the Black Lives Matter movement. Obviously, we're a Black-owned business. And we put out a statement on our Instagram, social media, that just said, windows are not lives. And we need to keep the focus here on what's important and where the real destruction is, and that's on the death of Black people in America, and specifically Black men at the hands of police.
And Hadley, I understand that experience led you to take another action, to give back to the community. Can you tell us about that?
We actually, John, were able to take the profits from June and go over to Boston University and endow a fund with the help of our customers, actually, called the Urban Grape Wine Studies Award for Students of Color. And the fund will, in perpetuity, because we've been able to raise so much money for it, send students of color through the wine studies program at Boston University. And we will also be able to provide them with paid internships at our store, at restaurants, and at distributorships in Boston. And we will be able to get to the root of the lack of representation in the wine industry, which is so overwhelmingly white and male. And really be able to change the face of the wine industry in Boston through this program.
Hadley, thanks a lot. Hadley Douglas, owner of Urban Grape in Boston. And the name of that endowment, by the way, at Boston University, the Urban Grape Wine Studies Award for Students of Color. And we're going to continue to bring you stories of small businesses meeting the challenges arising during the coronavirus pandemic and other events around the outbreak and social unrest every day at this time. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Small Business Report.
And we thank you very much, John Tucker, recapping S&P down 12, down 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet. Here we go. This is Bloomberg Business Week. All right, you know know where this is from.
It's obviously from Pulp Fiction, but
Yeah.
I couldn't tell you the name of it. So Dave called it. I couldn't tell you the name of it. I couldn't tell you who's responsible for it, but I know where it is in the Pulp Fiction soundtrack.
Totally. I mean, you can see the credits rolling.
Yep.
Dave, it's like Miserlou or something like that?
Congratulations, Jason.
Really?
Boom. Yeah.
Nice
You win.
job.
Only because
Who's the artist?
I really wish I've been racking my brain ever since it came on, and I cannot remember. I mean, it's like one of those Southern California
I might have to cheat
kind
and
of
go
surf
Google it.
bands, right? Like I just can't remember it.
Dick Dale.
Dick Dale.
guitarist.
Oh, darn it!
Died last
Right.
year.
Yep.
And actually, there's a whole story. If you feel like Googling Miserlou, you can look it up and find out. There's a whole story behind that song. Actually, started out decades earlier in like the Middle East and the Mediterranean.
Wow.
And then was adapted by Dick Dale.
Yeah.
And then ended up on the Pulp Fiction soundtrack, as you were talking about.
And the rest is history.
Anyway,
Yeah.
all
It's a great
this,
tune.
all this comes out of the chart because the headline that you actually see on it is Hanging 10, which of course is a term from surfing, and that was a surf rock song, etc. The 10 refers to 10 months. We're getting really close to the NASDAQ 100 beating the S&P 500 for 10 months in a row. As of yesterday, it was ahead. I mean, you've had some back and forth. Obviously, the earnings are going to be coming up this week from the likes of Apple and Amazon and Google's owner Alphabet and Facebook will go a long way toward determining how this shakes out. Anyway, Julian Emanuel, who's the head of equity and derivative strategy at BTIG, brought this up in the context of where do we go from here? And the way he figures it, this streak, which would, by the way, match the longest one ever, which was set back in 1999-2000 as the dot-com era was coming to its peak. He figures, well, don't expect this one to go much longer. I mean, among other things, he's talking about the reaction to some of the earnings that we have seen already. Think Tesla as an example there. And he's got other concerns beyond that. The NASDAQ 100 sort of hanging around a round number of 10,000 and, other issues that may get in the way. What's happening between the U.S. and China, because it may affect a lot of the tech companies. In any case, if you want to see this chart, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave Wilson, that was a gem. And you
Nice
called
job.
it. You called it. We knew exactly what it was. I wish I had remembered the artist, but I think the only reason I know it is because I listened to that soundtrack obsessively. I love that.
Early 90s. I mean,
Yeah.
flashback, right?
Totally. All right, let's get down to Nancy Lyons, World and National Headlines. Hey, Nancy.
Hey, Jason. Democratic presidential candidate Joe Biden is outlining ways that he wants to fight racial economic inequality.
Bold, practical plan that's going to help build a stronger and a more just and sustainable economy for everybody this time included.
He plans to spend $50 billion to provide startup capital that can help entrepreneurs of color start businesses in disadvantaged areas. He would create a $15,000 federal tax credit to help low and middle income families cover down payments on their first homes. Well, it's been a tense day on Capitol Hill with Attorney General William Barr being questioned by the House Judiciary Committee. Lawmakers are investigating whether the Justice Department has come under political influences. Barr was asked twice by Democrat David Cicilline whether the solicitation of foreign assistance in an election is ever appropriate.
Depends what kind of assistance.
Is it ever appropriate for the president or presidential candidate to accept or solicit foreign assistance of any kind in his or her election?
No, it's not appropriate.
Okay, sorry you had to struggle with that one.
Barr denies that he's working to help promote President Trump's law and order agenda by sending troops to Portland and other cities to deal with the increase in demonstrations. Well, tonight, the George Floyd Hologram Memorial Project will launch in Richmond, Virginia. A hologram of Floyd, who died after being held down by police, will temporarily replace the statue of Robert E. Lee. The family will be traveling throughout the country to various cities to transform spaces that were formerly occupied by racist symbols of America's dark Confederate past into a message of hope. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Scarlett Fu here with you. And this was a story that you and I both were like, shwoom.
We just glommed
Redbird
onto.
Capital Partners, Oakland A's executive Billy Beane, heard of him through Moneyball, Redball. It's a SPAC. I mean, this is like everything you and I love coming together, don't you think?
Yeah, it's a combination of all the things that are buzzy, and of course we love sports, so it combines that. My question here is, this is a new chapter in Billy Beane's life, right?
Yes.
And the story continues. He had this incredible success with the Oakland A's and Moneyball and analytics. There's got to be a sequel to Moneyball, the movie. Does Brad Pitt come back and do SPACs in the sequel?
Well, I mean, here I thought that getting Brad Pitt to play you in a movie was probably a highlight, and it remains. That could have been peak Billy Beane. But, I mean, he's gone on. He's got a minority stake in a English football club. He's an advisor to another Dutch soccer club. So he is plying this trade. I mean, the other interesting thing from a Wall Street perspective is special purpose acquisition companies. They are a way to essentially get public fast. It's a blank check company, so they're going to do some deals. We don't know exactly what they're going to do, but this nexus, and again, this is where you and I are so interested in this sort of nexus of sports and money and data. There's a lot of money to be made, and he's got some good partners, including Jerry Cardinale, Alex Scheiner, many of whom have deep, deep roots in sports and media.
And of course, they will focus, Redball, this company, this blank check company, will focus on sports media and data analytics. So, Jason, I suspect we'll be talking about this for months to come, and we'll be trying to speak with some of the company executives at these companies that Billy Beane will eventually invest in.
Yeah. So keep an eye on that. Moneyball continues, and as you say, Brad Pitt, he's probably already thinking, how do I make a SPAC sexy? I mean, look, he made baseball statistics sexy.
I know.
So I think
who's the director? Adam McKay? I think
Adam McKay.
A lot of credit goes to Adam McKay.
Aaron Sorkin wrote it. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, a late-day fade. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all lower. Stocks are falling as traders assess corporate earnings amid a resurgence in global coronavirus cases. After the bell, we'll be hearing from Starbucks and Visa, Akamai as well, among many other companies. Right now, the S&P is down 17. That is a drop of about 0.5%. Dow Industrials down 175, down 0.7, while NASDAQ is down 110, a drop of 1%. We've got the 10-year up 12.30 seconds, the yield 0.57%, gold up 0.9%, 19.59 the ounce, and West Texas Intermediate crude down 1.7%, 40.91 a barrel. Recapping, S&P down 16, a drop there of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is time for the Drive to the Close here on this Tuesday afternoon. We're 11 minutes away from the close of trading here in the U.S. Let's bring in Michael Sheldon, Executive Director and Chief Investment Officer for Hightower RDM Financial Group. He joins us on the phone from lovely Westport, Connecticut. Michael, how are you?
Good, thanks. How about yourself?
Not bad, not bad. Happy to be here with you and Scarlet Fu. So let me ask you this. This is a big week, and we were talking about this at the top of the show. We've got the Fed, we've got earnings, we've got negotiations in Washington about the stimulus, continuing stimulus, what happens next, and we've also got a surging virus. What's the most important thing for you to watch?
Well, as you said right now, the market is really just focused on a few things. It's focused on second quarter earnings, the latest economic data, of which there's quite a bit this week. The stimulus package in Washington is certainly front and center, and also the number of new cases. So all of those are playing a role. In terms of the most important thing right now, I think investors are probably focusing more on the stimulus package, although all of those are certainly playing a role. In terms of the markets, we've started to see some weakening in some of the high-frequency data. For example, weekly jobless claims, which had risen for, I think it was 14 or 15 consecutive weeks, rose last week, for the first time. And there's some fear that if Congress doesn't act and the number of cases continue to go up, that the economy could slow down somewhat or the recovery could slow. But offsetting that, the important thing is that until the economy is really on stronger footing, we'll probably continue to get fiscal stimulus and monetary support from the Fed and Congress over the next several months.
I'm looking at markets right now. The equity indexes are sinking to their session lows, extending losses with the NASDAQ off by 1.2%. The dollar is weaker right now and hasn't really moved a whole lot. The 10-year yield just below 58 basis points, pretty much stuck in the range it's been in for the last couple of weeks, right around that 60 basis point level. Michael, looking at the volume here, it is noticeably light, off about 10% in the case of the NASDAQ from the 5-day average, which already has come down quite a bit from the heyday in June and May. What is it going to take for people to actually participate in this market, or a lot of people sitting this out right now as we wait for clarity on, for instance, the virus from the Federal Reserve?
Well, it's important to know, typically in the summertime, volume does slow down. In most years, people go away on vacation. This year is obviously a little bit different. People are taking different types of trips. Maybe they're driving somewhere instead of flying. So I wouldn't be surprised to see somewhat of a range-bound market over the next few months. There are a lot of different moving parts right now, as you just pointed out. And until we get better clarity on the number of cases and Fed policy, on stimulus from Congress and what the earnings outlook is really going to be going forward, we could very well be in a range-bound market. And we also have the election coming up, which is another issue that investors are talking about. So there are plenty of things to sort of worry about. Our feeling is that as you look ahead over the next 12 to 18 months, that the economic expansion will continue, but it likely will have some bumps along the way and probably won't be a straight line.
Talk more about the election, Michael, because I feel like in any normal presidential election year, that'd be all we were talking about right now. I mean, it's the end of July. We'd be headed into convention season. So much would be on the table. What are investors saying as we get toward, really, I mean, we're under 100 days to the presidential election here.
Yeah, we look back at history, and typically the markets don't tend to react to the election until sometime in August, and then you start to see some movements. This is clearly a pretty high-profile election coming up. At least until we have more information, we think it's probably important for investors not to overreact at this point. Obviously, a lot of people thought the markets would sell off after Trump was elected several years ago, and clearly that didn't happen. I think right now there's a lot of fear that Biden and the Democrats are going to increase regulation and raise taxes. However, there are some offsets to that. For example, Biden has talked about bringing jobs back from overseas, increasing the number of manufacturing jobs. He's talked about infrastructure. So there are areas of the economy that would actually benefit, and we could have better trade policy with our neighbors. These are all possibilities. So at this point, at least, we think it's probably premature to sort of overreact, but these are things we are thinking about.
Are you thinking about the possibility of a contested election? We might not get an answer for weeks, if not months.
It's hard to believe we might be going back to, I think, what do they call them, the hanging chads when several years ago in Florida. We really don't know the answer to that at this point. There's also the possibility that Trump may challenge people's ability to actually mail in ballots. But at this point, we're just hoping we get a new president and we get the leaders of Congress, and we'll figure out from there how that will affect the economy and, importantly, any changes we might want to make to our investment portfolios.
Michael, one last question for you before we let you go and get to the close of trading. Tech stocks, Dave Wilson made the point at the top of the show that, I mean, they, between testimony on Capitol Hill tomorrow and big earnings from a bunch of the FANGs on Thursday, really are incredibly important to watch from so many aspects. How do you think about tech right now in a minute or less?
So I'll tell you, the two sectors of the market that we favor the most are technology. They're benefiting from defensive growth characteristics. They have the strongest balance sheet in the S&P 500. Some of them are benefiting from the new sort of work-at-home mentality. And then we also like healthcare, which is trading at a discount to the S&P 500 and is sort of our GARP, or growth at a reasonable price. Some of the technology stocks have gone up quite a bit, and they are growing to offset that increase in PE. But we think they're important to have as part of the growth side of a portfolio within a diversified investment portfolio.
All right, good stuff. Thank you so much. Good luck with the rest of a very busy week. Michael Sheldon, Executive Director and Chief Investment Officer for Hightower RDM Financial Group, joining us on the phone from Westport. And Scar, I'm glad you mentioned that sort of going into this segment. I mean, stocks really are, bouncing, at least in the S&P's case, bouncing along their lows of the session and really took a leg down there in the last half hour or so, it looks like.
Yeah, we've seen pretty much a straight line down since 3 p.m., and nothing's really kind of halted it. I don't see any headlines crossing that's really encouraging it, but as we've been talking about, the volume is not there, so moves tend to get exaggerated. When it comes to market breadth, you have 3 stocks down for every 2 that are higher on the New York Stock Exchange. So the number, in terms of the actual index levels, it looks probably a little bit worse than how it actually is once you get beneath the numbers. But nonetheless, a down day here on Tuesday.
All right, we're going to break it all down for you. Some movers and shakers. Dave Wilson's stock of the day. A lot of earnings to come as well. We're also going to catch up with the co-founder of Square, an expert on China. So much to get to. We're not even halfway done here. Almost. But a lot more to come. For Scarlet Food, Jason Kelly. It's Bloomberg Business Week. Stick with us.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up a losing day and as we await the latest earnings out of Visa, Starbucks, eBay, and Akamai, among others. This update brought to you by Witham, a forward-thinking advisory and accounting firm helping clients to be in a position of strength in the new reality of business. Learn about their innovative solutions by visiting witham.com. Stocks fell. In fact, we closed near the lows of the day. Here are the numbers. I'll give you the why in a moment. S&P down 21, a drop there of 0.6%. Dow down 205 points. A lot of the selling coming in the final hour there, really in the final 30 minutes. The Dow dropped 0.8%. NASDAQ tumbled 134. NASDAQ lower by 1.3%. Should also mention that the S&P 500 index with today's loss back on the minus side in the year-to-date column. 10-year up 12.30 seconds with a yield of 0.57%. Gold up 0.8%. 19.56 the ounce, and West Texas Intermediate crude oil down 1.6%. $40.95 a barrel. Now, as for the overall market backdrop today, Michael Sheldon is Chief Investment Officer at Hightower RDM Financial Group. He was our guest moments ago right here on Bloomberg Business Week.
There are plenty of things to sort of worry about. Our feeling is that as you look ahead over the next 12 to 18 months, that the economic expansion will continue, but it likely will have some bumps along the way and probably won't be a straight line.
McDonald's shares declined today, down 2.5% after reporting its worst global sales decline in recent memory. D.R. Horton reported orders for new homes that crushed estimates, but shares moved lower. Shares down today by 3%. Also declining after earnings, 3M, it missed estimates. 3M tumbling today by 4.8%. Recapping, move lower for the Dow, the S&P, and NASDAQ closing at session lows. S&P down about 21 points. That was a drop today of 0.6%. NASDAQ down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Your next move will be your last.
Nobody move a muscle.
Damn, Stiffy, you got some moves.
And I'm moving on from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week. Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little moving and shaking. We got a lot of earnings crossing. I do want to bring you, Scarlett, Amgen. That company saying second quarter adjusted EPS came in at $4.25. The estimate, that's a beat, was for $3.79, also boosting their fiscal year EPS guidance. That stock in the after hours, it is up a little less than 2%. And as you heard Charlie talk about, we've got a whole slew of earnings set to come after the bell. We got a lot of chip makers coming out, Maxim coming across the tape right now. Anything specific that you're looking at for the day or especially interested in seeing?
Well, I know I'm looking forward to AMD's results because AMD's trajectory is so different from Intel, right? After all the production woes there, we're looking at AMD just kind of on the up and up, while Intel's struggling and trying to find its identity, really, as the world's biggest chip maker. So I think that's a really interesting contrast there, and certainly when they report, we'll bring you the latest numbers. Also, 3M's results came out today. 3M was the worst performer in the Dow Jones Industrial Average. Really interesting because I think the expectations was that it was going to be a stellar performer because, after all, it makes those N95 face masks and respirators. And instead, if this is a company that couldn't hit it out of the park with the opportunities presented by COVID, then who can?
Yeah, absolutely. Yeah. I mean, and we did see, I'm glad you brought up some of the earlier earnings. We saw McDonald's. I wanted to mention that briefly. You heard Charlie mention it quickly. That stock was down today, $5. So down, ended up down about 2.5% there. And, you know, this is a company that you worry about. Certainly in a pandemic, people not getting out, a plunge in global sales, even as U.S. numbers were coming back. But again, this is a global pandemic, and McDonald's saying that they are taking all sorts of actions to, try and cope with the effects of this virus.
Yeah, including trimming its spending and selling a chunk of its Japan business and speeding up some closures. 200 U.S. stores will be shut down this year. About half of them actually at Walmart locations. I didn't realize that there were that many that were tied to Walmart.
Yeah, I didn't either. I saw that headline earlier and was intrigued by it. Mondelez, that's another one. Starbucks is out. Let's look at those real quick as they cross here, a name that we certainly watch very closely. Starbucks saying that their third quarter net revenue came in at $4.2 billion. That's a beat. The estimate was for $4.06 billion. Third quarter comp sales down 40%. That is better than expected. The estimate had been for down 42.8%, seeing COVID impact to moderate meaningfully in the fourth quarter. So a loss per share of 58 cents there, Scarlett. And again, that comp sales number, I think, is what folks were looking for. Let me take a quick look.
I mean, that number just gets your attention, down 40%.
Right, and that's good news compared to what it was. And the stock is up just a touch. It bounced pretty high coming right out of the gate now, up about 0.6-0.7%.
And we also just got results from Visa. Visa's third quarter adjusted EPS was $1.06. That is 3 cents better than what analysts were looking for. And of course, Visa is one of the companies that has seen doing a little bit better because when people were spending, of course, they were charging their purchases because they were doing everything online. So Visa, I mean, you think about how certain companies have done really well. Square, for instance, right?
Yeah.
With the electronic payments and everything. So Visa in a better position than many as a result.
Absolutely. Speaking of Square, we're going to talk to the co-founder later on this hour. Let's take a quick look at volatility. The VIX up a touch, given what we saw going on in the markets, up 3.6%, closing at 25.62. It's Bloomberg. All right, let's get to Dave Wilson now. He's got his stock of the day. Dave, what you looking at?
I'm looking at True Blue, Jason. It's a staffing company whose main business is supplying blue-collar workers, as the name would suggest. The company also handles workforce management and recruiting. True Blue was founded in 1989, went public in 1996. The ticker is TBI. The share set a record in June 2015. Then they bounced around before sinking as much as 50% this year. Most of the slump occurred in February after fourth quarter results were disappointing. Now, True Blue's second quarter numbers came out late yesterday and told a much different story. The company posted a narrower loss than analysts expected in a Bloomberg survey. Revenue surpassed projections for just the second time in 7 quarters. True Blue said demand rebounded near the end of the quarter, and the recovery has continued this month. The company also said it expects to benefit from a cost-cutting program that's already producing savings. Now, all of this sent True Blue's shares to their biggest gain in 11 years. They climbed more than 23%.
Interesting stock. How'd you find that one, Dave?
You know, I just look around and try and find stories that are worth telling.
He liked the name, I could tell.
True
You know, I got the Madonna song in my head. It's
Me
sort of
too.
like an earworm now.
I am so mad at you for that, by the way, because as soon as I saw that, when you sent it across earlier today, I have been...
Humming it in his mind.
Yes, absolutely. That's like, what, late 80s, early 90s Madonna?
I want to say 1988, somewhere around there, 87, 88.
There you go.
Yeah, I link it back to a specific summer.
Yes?
Jason, you're welcome.
Thank you, Dave Wilson. All right. We will catch up with you tomorrow. I know Scarlett is already trying. She's just racking her brain trying to think of, like, what's the best strategy.
Well, it's got to be
the
80s
song of the
tomorrow
day.
because he did 70s yesterday. He did 90s today. So, Dave.
Well, 90s in the sense of, like, the soundtrack, but I think that song is actually probably from the 60s.
True. But, I mean, let's face it. It got a second life, right?
Yes,
in the 90s
it
with
did.
Pulp
The only
Fiction.
reason you and I know it is because of
Thank
Pulp
you.
Fiction. That's for sure. Yeah, so I'll grant you that for sure. All right, but either way, 60s, 70s, 80s, 70s. Yeah. Anyway.
Yeah,
So
it's time
I think,
for an 80s
I think
song.
you're right. We're due for the 80s. Maybe some Bangles.
Did Dave hang up yet?
He's gone.
Oh.
We lost him. All right. Let's head out to San Francisco now. Ed Baxter is there. He's got world and national headlines.
I think you guys are participating in age protection there. But then you're doing a good job with it. Attorney General William Barr in front of the House Judiciary Committee today, many topics, but a focus on federal agents in Portland.
These are people who this Congress has charged with protecting federal courts. They're directed to protect federal courts in the U.S. Code, and they are under attack. And they're being injured, and it's been constant for 60 days.
Mail-in voting, he says he doesn't like converting the system.
I'm not talking about accommodations to people who have to be out of the state or have some particular need not to, inability to go and vote. What I'm talking about is the wholesale conversion of election to mail-in voting.
He also said in a clear outcome election, he sees no way for a president to challenge the outcome. And he says he doesn't believe there's overall systemic racism in police departments. Dr. Anthony Fauci on ABC says he's going to continue to do his job.
I don't tweet. I don't even read them. So I don't really want to go there. I just will continue to do my job no matter what comes out, because I think it's very important. We're in the middle of a crisis with regard to an epidemic, a pandemic.
And he says the answers in the fight are pretty clear at this point. Follow opening guidelines.
Some states are not doing that. We would hope that they all now rethink at what happens when you don't adhere to that.
Congressional Democrats stepping up today to respond to the GOP stimulus package.
To have a draconian $400 cut immediately is going to make it very, very difficult for American families to meet their rent, to pay for food.
Yeah, saying it will damage the economy. Steny Hoyer. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. So these are the sorts of stories. These are just bread and butter Bloomberg stories, Scarlett. Your most read story for the past hour is a really nice scoop, I believe, from some of our colleagues over in Europe, all about Credit Suisse. Safe to say, sort of beleaguered Credit Suisse has been for the past few years. You know, they got rid of their CEO, got a new CEO last year,
They
I
had
believe.
that spying scandal.
The spying scandal, yeah. I mean, that was, talk about a Netflix movie. Well, now they're going to merge the investment bank and trading, a pretty major overhaul, to say the least, for the Swiss lender. Also going to put together its risk and compliance units. It's a way to save money when you start jamming things together and, you know, maybe a way to find a way forward for the big Swiss bank.
And the global markets division has been doing really well. I mean, as with most investment banks that have a big trading presence, the second quarter was pretty good. And it feels like Credit Suisse maybe is using the Goldman Sachs strategy,
Yes.
right? Let's bet on markets and global trading, and that'll be our path forward, at least for now.
Yeah, absolutely. I mean, the other thing is, and listen, it's a big bank, so you can't be surprised when they're caught up in some of the other scandals out there, but they've worked on deals linked to Luckin Coffee, Wirecard, of course. Those are
good.
two incredibly high-profile scandals. Also, they were forced to start an internal probe into supply chain finance funds with links to SoftBank's Vision Fund and billionaire Lex Greensill. It just feels like, I'm playing the world's smallest violin for Credit Suisse, but they kind of can't catch a break here.
Yeah, well, it needed to do something, and maybe that's what's important to shareholders, right?
Yeah.
Showing them that you're doing something. One thing we need to make clear, though, this is Bloomberg reporting that this is going to happen.
Right.
The actual announcement could come as early as Thursday, according to our reporters.
Yeah, this is, as you say, after they talk to some folks in the know. So we'll see when that happens and what the impact is, especially when it comes to some potential job cuts. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From
Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Breaking news from the earnings desk. eBay's second quarter adjusted EPS from continuing operations. $1.08 estimates there, $1.06 boosting its full year outlook. And then also after the bell, we heard from AMD sees full year revenue up about 32%, saw about 20 to 30% year over year. AMD's second quarter adjusted EPS, 18 cents, estimates there 16 cents. Second quarter revenue on AMD, the chip maker, coming in at $1.93 billion. Estimates there were for 1.86, so a beat from AMD. Also after the bell, Starbucks reported a deep sales decline in its latest quarter. Consumers buying more per order, but visiting much less frequency. Amgen's second quarter adjusted EPS, 425, estimates there 379, boosting its full year EPS guidance. We are looking at the shares no lower now by about 2.1%. And finally, Visa, third quarter adjusted EPS, $1.06, estimates there were for $1.03, says it is not providing a full year outlook. Visa shares down now by about 0.9%. It was a down day on Wall Street as investors digested a lot of those earnings report, a lot of the losses really coming in the final hour or so of trading. The S&P down 21, a drop of 0.7%. The Dow falling by 205, down 0.8%. Nasdaq down 134 today, down by 1.3%. 10-year yield 0.57%. Gold up 0.8%, 19.57 the ounce. And West Texas Intermediate crude down 1.5%, 40.96 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, Mondelez out with earnings. And before we dig into it with our own Jen Bartashis, let's hear a little bit of a conversation Carol Masser and I had with the CEO, Dirk Van de Put. It was an edition of Business Week Talks just recently. He talked about the ways the company has had to pivot amid the pandemic.
We had to adapt our communication because people are sitting at home, and some of the communication we have on our brands is all about getting together with your friends or being out. Well, that doesn't play a role. For instance, Oreo in China, we started to discover that we needed to focus really our communication on how to cook with Oreo and how to use Oreos in your recipes at home. We would normally never have done that, but in this case, we had to.
Yep, you heard it. Cooking with Oreos. That's where we are in the pandemic. All right, Mondelez out with their second quarter results. Let's understand what they had to say. Jennifer Bartashis is with us, senior analyst for food retail over at Bloomberg Intelligence. She joins us on the phone. What's the takeaway here, Jen?
Hi. So actually, this is not a bad quarter, all things considered. When you think about all of the pressure that's come from COVID-19, and the fact that Mondelez really has a lot of exposure to emerging markets, which have been hit very hard, all said and done, it's not a bad quarter. Adjusted EPS came in at above the highest estimate, and revenue came in at a pretty solid number as well.
One thing that I did notice is that Mondelez will not provide any kind of full-year outlook because of COVID-19. That in and of itself is not too surprising. A lot of companies aren't going to provide visibility if they don't have that much certainty. Yet, I contrast Mondelez with a company like PepsiCo, which has a snack division, and their current quarter forecast was pretty bullish. Why is a company like PepsiCo able to give some kind of guidance, whereas Mondelez can't, when they both peddle in comfort food?
Well, that's a good question, and part of it is the regions in which they're operating. And so Pepsi's strong snacks, they obviously have strong snacking around the world, but the North America is one of their strongest areas, whereas for Mondelez, it's more in the international markets. And because of that, when you're talking about markets in Latin America, in Asia, and to some degree in Europe, it's a little bit harder to forecast. And we're not sure yet how long the economic stress of COVID-19 is going to occur in those countries. And that really impacts discretionary income. It impacts how much people are spending on things like snacks.
Right. And Jen, I wonder, and this was something that we did bring up with Dirk Van de Put, and you can check out that conversation on Bloomberg.com, BusinessWeek.com, and on our podcast feed. Just a quick plug there. But, we did talk to him about supply chain disruptions, and I wonder what you make of that part of the business, especially given their global exposure and sourcing and all the things that they've had to do, because our sense from him was that, they were having to build up some inventory in various places to counter some of the issues that they're having.
Yeah, supply chain is one of the things that's on a lot of people's minds. And when you're looking at Mondelez, they were able to keep a lot of their factories running, but perhaps not at full capacity, especially in overseas markets. Part of what he's talking about when he's talking about stockpiling or preparing and adding inventory of raw materials is just on the potential of another wave of the virus, and having things on hand so that production can continue should there be another outbreak. And that's what a lot of companies are discreetly trying to do, is just make sure they're prepared in case there is a second wave later this year, that it won't impact their supply chain too much.
I go back to what the CEO was telling you and Carol, Jason, about how to cook with Oreos. Here's some options. The Oreo chunk cookie, deep fried Oreos, no-bake Oreo peanut butter bar, and let's see, Oreo truffles.
Yeah,
that
all sounds good to me, Jen, right?
I think if you would spend any time on something like TikTok, you'll be scared of some of the recipes you can see out there.
But it does go to, Scarlett's earlier point that, this is a business that probably does, sort of supply chains aside and getting the food to people aside, this is the sort of food that people are eating, for better or worse.
Yeah, when people are hunkered down at home or they're spending more time at home, I've been calling it a retreat to comfort food. And that involves snacking, that involves sweets. And that's really in the wheelhouse of what Mondelez is all about. And I think one of the things that is interesting and that I think we'll hear more from them about is their approach to making that a good choice. And so, options to reduce sugar in their chocolate, to reduce pack sizes, to restrict calories. There's some sustainability and some health-oriented things that they're targeting that should also position them for some interesting growth further down the road once we get past COVID-19.
There's nothing more comforting than an Oreo milkshake or Oreo cheesecake. Jen, very quickly, the weaker dollar, is that going to be a pain for Mondelez?
That's going to continue to be an issue. Currency translation has a big impact on their overall numbers, just because of the number of countries in which they operate. So we are expecting that to continue to be something that exerts pressure on earnings.
All right, Jen Bartashis, you're the best. Thank you so much, Senior Analyst for Food Retail, giving us instant analysis of Mondelez, some really good information about how to think about that company. She joined us on the phone, of course, one of our stars over at Bloomberg Intelligence. Well, for those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week continues right here. We're going to talk to one of the co-founders of Square about a vaccine, a new book he's got. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Surley. That is coming up next. Stick here with us. We're going to talk to Square. We're going to talk about China. We're going to bring you the president later on. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, coming up, I'm very excited to have this next guest back. His name's Jim McKelvey. He's a co-founder of Square. He's joining us from St. Louis because that's where he moved to, and he's doing, Scar, some really interesting work helping with the development of a vaccine at his alma mater, a place where his dad ran the engineering department.
Washington University.
Wash U, baby. Yeah, it's going to be great. So excited to catch up with Jim and talk about his book as well. He visited with us about it earlier in the year, and innovation, it's more important than ever. That's all coming up. But first, Charlie Pellet, what's going on after the close? So many earnings.
Absolutely. Let's get to what we've got because there's a lot going on after ours. Let's begin with Advanced Micro Devices. AMD delivering a strong forecast. Its shares are surging after ours. AMD bolstered by signs the company is winning orders from larger rival Intel in the lucrative market for server chips. Right now, AMD is up by 8.5%. Also after the bell, Starbucks. Right now, shares are virtually flat. It reported a deep sales decline in its latest quarter. Consumers buying more per order, visiting much less frequency. Think about it. If you're not going to work or school, probably not stopping by Starbucks during your morning commute. Visa reported adjusted EPS for the third quarter that beat the average analyst estimate. Says, though, it is not providing a full-year outlook. We've got Visa shares trading lower now by about 1.5%. Stocks fell today as traders assessed corporate earnings amid a resurgence in global coronavirus cases. Beata Cure is co-head of investment strategies at Bernstein. She was interviewed this morning on Bloomberg Television.
You're looking at not only corporate earnings, but you're looking at the path of a virus and policymaker response to the path of a virus. So from a forecasting standpoint, whether it's companies dropping earnings in the second half or it's economists providing projections, everybody's in the same boat in trying to understand the implications across policymakers, virology, and profitability.
All right, so what about trying to figure out airline earnings? JetBlue today said it does not see the industry returning to normal for 2 to 3 years. Also says it will not be operating any flights that are not cash positive. JetBlue shares today up 0.8%, UAL up 3.2%, American up 3.3%, and Delta was up by 1.7%. S&P down 21, a drop today of 0.7. The Dow tumbled 205, down 0.8. NASDAQ down 1.3%. 10-year yield 0.57%. Gold up 0.9, 19.59 the ounce, and crude down 1.4%. West Texas Intermediate now at 41 even a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly and Scarlett Fu here with you on a Tuesday afternoon. Really delighted to have back with us Jim McKelvey, co-founder of Square, also the author of a really great book called The Innovation Stack, Building an Unbeatable Business, One Crazy Idea at a Time. He visited with us about that book earlier this year, or what feels like about 100 years ago, Jim, because the world was a very different place. You were in our studio. I was in our studio.
There are more than one person in the studio? That's amazing.
Exactly.
Yes, we could actually see each other, and there were no masks.
And there were no masks. Exactly. We were just sitting there having a nice conversation, and I really enjoyed it then. So happy to have you back with me and Scarlett joining us as well. So tell us what you've been up to, because you think about this as an innovator, as an entrepreneur, this crisis, these multiple crises that we're facing. Tell us first about the work you're doing with Washington University. It's your alma mater, and you have a family connection to the school even beyond going there, right?
Well, yes. My father worked there for 27 years as a dean and then taught as a professor there. So I grew up as a kid of WashU, and the engineering school is now named in his honor. So it's the McKelvey School of Engineering. And WashU has one of the best medical schools in the world, and they have been doing some leading-edge virus research. So they reached out to alumni to fund some early research. This was before the government could get their checkbook out. They wanted to get an early jump on it. And so a bunch of us gave money to the medical school, and they've been doing, they've got 2 very promising vaccine candidates. They've been in animal trials, extremely successful. And then they have almost more exciting, they have a very accurate saliva-based test, and they can do about 5,000 tests a day. And we bought some more machines. It looks like they'll be 10 or 15 or more thousand per day. So
Okay, a saliva test rather than a blood test. That sounds incredible. How close is that to something becoming a reality?
So the saliva test works right now. So they have the great thing about having a medical school tied to a hospital is you've got a lot of sick people that you can test that you know have the virus, and a lot of healthy people that don't. So they've run the test. The tests are working very well, and they're now scaling up testing so that WashU's campus can open in the fall, and they can also make the city of St. Louis much safer.
And Jim, I mean, this is an area that you've obviously taken a deep interest in. I will say from the outside, not knowing it as intimately than you do, it does feel like the pace of innovation and the pace of collaboration around this pandemic are something we've never seen before. Fair?
Absolutely. So the medical community particularly is very well tied together. They're working collaboratively. It's wonderful to watch, although I'm not in that business. I just sort of stand on the sides and hand them money. But
listen,
really
we need it. That is a very valuable piece of this equation, Jim.
Yeah, me. Just hand them the money.
And so what have you seen, you know, from a business person's perspective, from an entrepreneur's perspective, what have you seen that's impressed you?
Well, I mean, the first thing we've seen is a lot of terrible suffering, small businesses closing, people going out of business, a lot of suffering. But unfortunately, that environment creates a lot of chaos, and chaos is actually great for entrepreneurship. If you're doing something new, something that the world has never seen before, you almost have an advantage if the rest of the world is a little bit on their heels. And boy, we're all on our heels now. So innovation and new ideas are coming faster because when everything's working well, people tend to do what they've always done. But when things are disrupted, then people are looking for new solutions and they're more open-minded.
Are companies more open-minded as well when people come up to them and say, hey, I've got this crazy idea, you'll never believe it?
Oh, my God, yeah. As a matter of fact, Square started in the middle of the last recession, and we were amazed at the number of companies that would talk to us who we thought would just be too big to care. But Visa and MasterCard and American Express and all the banks would meet with a startup. But that was back in 2009 when everyone was suffering.
All right, we're going to continue this conversation in just a minute because we have, I think, between us, roughly 1 million more questions for Jim McKelvey, co-founder of Square, author of The Innovation Stack, Building an Unbeatable Business, One Crazy Idea at a Time. Want to dig more into some of what he's seeing because I know he talks to up-and-coming entrepreneurs all the time. And also the fact that he's outside of Silicon Valley right now in San Francisco, I think is a really important point of view as well. So much more ahead with Jim McKelvey, co-founder of Square. You're listening to Bloomberg Business Week. Jason Kelly and Scarlett Fu. It's been an earnings palooza. We're going to get some headlines around that. We're also going to check in with one of our China experts, Chris Benton, coming up. That's in the 5 o'clock hour. And
don't forget the president.
We'll hear from the president as well. So lots more to come. In the meantime, San Francisco, speaking of which, Ed Baxter is there. He's got world and national headlines. Hey, Ed.
Speaking of the president and Ed Baxter, where?
President Ed Baxter.
Okay, thank you. I wanted to clarify. Joe Biden has made a policy speech focusing on racial equality and a return to normalcy. Also said regarding the coronavirus that the nation needs to begin to follow the science and pointed out how other areas are handling travel.
You can't travel to a whole hell of a lot of European countries. You can't get in a plane and go there. Don't come. You're a danger to us. It's because we're not following the science. And there's very little transparency of what's going on.
He says there needs to be quarantine after travel. It should be noted the Tri-City area now has that and just expanded it further today. He also says he will have his choice for vice president and be able to announce it next week. GOP stimulus bill getting some more blowback today. Michigan Governor Gretchen Whitmer says not enough in it.
Their plan does not give the adequate relief to millions of hardworking Americans who've lost their job as a result of the mishandling of this crisis.
Yeah, she says people need money to live. The virus itself, California continues to have major outbreaks in the Central Valley and Los Angeles. California HHS Director Dr. Mark Galley says disproportionately affecting the Latino communities in the state. He also says the death rate now is continuing to climb.
Today we're reporting 108 deaths daily as our average over the last 7 days. This represents a just under 19% increase compared to the week prior.
And Dr. Anthony Fauci on ABC today said he's not going anywhere.
This is what I do. This is what I've been trained for my entire professional life, and I'll continue to do it.
To the charge you've been misleading the American public?
I have not been misleading the American public under any circumstances.
San Francisco, I'm Ed Baxter.
All right, Ed, thank you so much. You're listening to Bloomberg Business Week. Well, Scarlet Fu, you can never escape a Bloomberg Business Week show without talking a little bit about private
I knew it was
equity.
coming. I
You
knew it was
that.
coming.
It was going to happen. Great story. In fact, I was messaging with our colleague Benjamin Robertson earlier about it, complimenting him. He and Ruth McGavin put together a nice piece. It's one of the most read. Private equity firms quietly return to debt-funded payouts. Dividend recaps. Remember those where they put a little more debt on, take a little money out, and
This
pay
is how they
off
pay
their
themselves,
investors?
right?
Yeah.
I mean, this
It's
is
one of the
called
ways.
extracting value from the asset, and it was very popular and it worked very well. But sometimes it leaves the company in a not so great position.
Yeah, saddled with a little too much debt. And you worry about it in these particular times when we are in, to say the least, an uncertain economy. I think it's fair to characterize where we are right now as such. But Providence Equity and KKR both doing some dividend recaps for Byte. It's a Baltic telecommunications firm, and Epicor Software, respectively. So this is, a reminder of how private equity tends to work. Now, the private equity firms would say they're doing this responsibly. This is part of the process of reshaping a company and part of the way that they ultimately make good on their promises to their own investors, which are pension funds and endowments and whatnot. But the debt is worrisome to a lot of people who watch this industry and who watch businesses in general.
Especially with interest rates so low and the companies taking on more and more debts just to kind of get through this difficult period and then adding on more debt on top of that. I'm glad you bring up the fact that these PE firms want to make sure that they pay their investors, right? Because that's part of it. All these pension funds need to get more return.
Yeah.
They can't get it in this low rate environment, so they go to private equity where returns are more substantial.
Totally. Yeah. And I mean, that's the fuel to this in many ways. That's how you have so much money accrued in private equity
The hunt
funds.
for
So
yield never ends.
never ends. Always going on. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pettit. Lots of earnings after the bell. The gradual reopening of cities around the world was not enough to turn things around for Visa. Spending on the firm's cards dropped 10% in the company's fiscal third quarter. Visa shares down now by about 2%. eBay raised its profit outlook for the year, but the new forecast is disappointing investors. Shares of eBay, investors bidding those shares lower now by about 4.1%. Advanced Micro Devices now up by 10%. It gave strong forecasts suggesting the company is winning orders from larger rival Intel in the lucrative market for server chips. And Starbucks reported a deep sales decline, but right now Starbucks shares up by about 2.9%. eBay also boosting its year outlook, as I mentioned. The Dow, the S&P, and NASDAQ all trading lower today. A lot of the losses coming in the final half hour or so of trading. The S&P dropped 21 points today, down 0.7%. NASDAQ lower by 134, down 1.3%. Dow Jones Industrial Average down 205, a drop there of 0.8%. 10-year yield 0.57%. Gold up 0.7% today, 19.56 the ounce. West Texas Intermediate crude down 1.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, we are back with Jim McKelvey. He is a co-founder of Square. He's also the author of the recently published The Innovation Stack, Building an Unbeatable Business, One Crazy Idea at a Time. And some of the ideas he's working on right now is, of course, funding research for new coronavirus vaccines at his alma mater, WashU in St. Louis. And Jim, we were talking about that and how it's a good environment to be an entrepreneur. For those who were entrepreneurs and have made their companies into big establishment companies, a couple of high-profile CEOs are going to be on Capitol Hill tomorrow. Among them, Mark Zuckerberg of Facebook. And of course,
all right, ladies and gentlemen, time's up for today. We made £800, so all of you who followed my trades, well done. So we made profit on Canadian dollar and euro. Have a great evening. I hope I'll see you tomorrow. As always, we will switch on our channel at 8 o'clock UK time, and we'll be working until 10 o'clock. Have a great evening. Be safe. I'll speak to you tomorrow. Bye-bye.
Talk to us. I mean, you are in a unique position because you obviously are part of the broader Silicon Valley community, but you are not of it, and you are not there now. And one of the perspectives that you've always been very generous in giving us is exactly that perspective of sort of understanding